Alright, quick update on Bitcoin. So in this video specifically, what we're going to be doing is looking at a potential theory that points towards the fact that the Bitcoin bottom could already be in at this moment in time. Now, before I do jump into this video, if you do already watch my channel, you probably already know why I do this. I like to cover as many different possibilities and theories to give you as much of an input as possible when you are trading these markets. I think it's very important to not only look at bullish or bearish theories if you're bullish or bearish. I think if you're bearish, you should look at bullish and bearish theories to make sure that you're not kind of, clouding your mind and blocking out data that otherwise could have been very apparent to you. So let's look at what's going on this chart. And you might be looking at this and thinking this is slightly weird, because if we do look at this chart, the Bitcoin price has already come down and broken below the previous all-time high. What this chart actually is the BTC USD chart divided by the M2 money supply. So why do we do this? Why do we divide Bitcoin by the M2 money supply? I talked about this in my video quantifying Bitcoin, and that is now going to be a monthly series on my channel, which I am going to be updating tomorrow, where we talk about Bitcoin measured against different asset classes. For example, Bitcoin against the M2, Bitcoin against the NASDAQ, against Tesla, against the SPY, against gold, silver, oil, commodities, Facebook, all of that good stuff. So I am going to talk about this extensively tomorrow, but for this video specifically, I wanted to talk about a theory which could point to the fact that Bitcoin's bottom could already be in. And this is, like I said, when we divide it by the M2 money supply, in other words, when we account for the money printing. Now, before we jump into this, like I said, this is not what I think is going to be playing out. Just to get things clear, I think Bitcoin is having a bounce up to 34 or 38,000. Then I think it's going to roll back down to lower price targets. However, when we do account for the money supply, so when we account for all of the, money printer go brr, the US basically just printing money like there's no tomorrow, we have already come back to the 200-week moving average. And why is the 200-week moving average so important? Put very simply, let's just take it back a few steps. What happened in the 2015 bear market? Where did we find the bottom on the weekly time frame? Well, looking at this, the candle body closes were perfectly on the 200 week. You take it up another level, candle body closes of the lows were perfectly, once again, on the 200 week moving average. Coming into, this was a black swan event, so bear in mind there is, this is obviously an anomaly in the market. This came out of nowhere. We were not expecting this, and this basically wrecked all the markets, not just crypto. So this is kind of an anomaly, but nonetheless, when we did come down and capitulate, we capitulated just below the 200-week moving average. So the 200-week moving average has a pretty good hit rate of calling, if you come into me, this is probably going to be the bottom type deal. And quite recently, looking at Bitcoin divided by the M2 money supply, we have come down almost to that 200 week. We didn't quite make it to the 200 week. So even looking at Bitcoin divided by the M2 money supply, it still kind of seems like this could be a bounce before we do move down to lower price targets. The RSI on the weekly is heading up very strongly, which is very nice. The last couple of times we saw this head up this strongly, we had a big rally here, we had a big rally here, big rally here, and a big rally here, and also kind of a tiny rally here. But this was, to be honest, this rally was from, we need to take a percent move, because unfortunately this is not a price chart. As we're dividing it by the M2 money supply, this chart is an index. So the index of this chart moved up about 40% during this move. So very impressive. So I do think we are going to be seeing an increase over on the markets in the next couple of weeks or so. And if we extrapolate something like a 40% move, you could see, let's do it over on the USD chart, because inflation hasn't changed too much in the past couple of week/month, this could mean that Bitcoin would be moving up to 36,200. So this was just a quick video. I did just want to show you that according to the M2 money supply, the bottom could already be, and this is obviously when you account for inflation. However, I think if we are accounting for inflation, we need to account for a lot of other things at this moment in time as well. We also need to account for the crazy geopolitical news going around in the world right now. We also need to account for the fact that the interest rates are exponentially increasing right now. So you know, we're in an unprecedented period of time, at least in my lifetime. You know, the interest rates have never been raised this high. This is not a good sign for the markets, and in my opinion, we could just be pumping for the next couple of weeks before we do roll back over on the 15th of June. Why specifically the 15th of June? That is the next FOMC meeting, where the Fed is very, very likely to increase the interest rates by another 50 basis points, also known as a 0.5% increase. So Bitcoin against the M2 money supply, definitely an interesting chart. I do also want to point out that we have pushed above the previous all-time high. So on this index chart, as long as we stay above approximately 1.42, then we might remain bullish. You know, this might just be like a cycle that we've never seen before. This might be, I believe they're called an expanding flat correction, where you've got, you know, lows, you've got a correction down to the lows, and then you've got another correction in this expanding flat correction, but it moves down slightly lower, and then it pings back up to the upside. So this could definitely be playing out. Be very, very cautious, because like I said, I want to make sure that I'm giving you as many perspectives as you can, so you can make up your own decision with a plethora of data at your disposal. But in my opinion, this is what's going to be happening. I think 34,000 up to 38,000, and then we're going to roll back down to some lower price targets. So I hope you enjoyed today's video. I do also just want to say, wrapping up this video, if we only do correct to the 200 week, then this would be a very, very mediocre bear cycle, because previously, you know, look at this. The first cycle we did, we had a 94% correction. The second cycle, we had almost an 89% correction. The next cycle after that, we had an 85% correction. And if we were to extrapolate that, I mean, we should be having like an 80% at, you know, 75% correction or something. We've only gone down 65%. So I do definitely think, oh, sorry, this is, I fat fingered this a bit. Actually, we've only gone down 64%. And once again, I zoom in more, and this needs to come down a tiny bit more. Yeah, that's basically on the dot there. So we've really only had a 64% correction. So be very, very cautious. I don't think the bottom is in, unfortunately. I wish this hopium chart could be the buy all end all, and the bottom would be in. But in my opinion, something like this is going to be playing out. That's all I've got. Once again, if I am wrong, because I've made a video on what to keep an eye out on, if I am wrong, and you know what to look out for when the Bitcoin bottom is in, the number one thing you want to be looking for, in my opinion, is the Bitcoin weekly RSI breakout. I think it's pretty much undeniable that if we do break out of the weekly RSI and we do start rallying, then the bottom would be in my opinion. Why do I think so? Well, we take it back a step. What happened in this bear market? Once again, price moving down, RSI moving down. What happened once we broke out of the RSI? We broke out around about the 14th of January. What was the price on the 14th of January? The price was, oh sorry, this is an index. The price was on the 14th of January, wrong cycle, $3,500, and the exact bottom was $3,100. So if you simply waited for the weekly breakout of the RSI, you really wouldn't have bought too far away from the exact bottom. And I don't think we've had this final capitulation. Like, I mean, look at this, you know, this bear market, huge multi-week capitulation. This black swan event, you know, multi-week capitulation, but really this 1 week was a huge capitulation. If we look at what's going on right now, we're really not seeing it. And as we've seen diminished returns to the upside, it does make sense to see diminished returns to the downside as well. But I just think 64% compared to 85% is probably not going to be enough to quench the first of the bears at this period in time. If we have like a super, super bearish drop, And I'm going to wrap up the video here. I think, you know, taking us down to the all-time high, that 71% drop, and what I'm actually calling for is about a 68% drop down to 22,000. So bear in mind, a lot less bearish than what we've previously seen is what I am predicting. Before I wrap up this video, I would just like to say I am recording this video on a new PC, and listening back to some of the videos, it does sound like my mic has changed slightly. So let me know if you notice any difference in the audio quality. Let me know if you think it's better or worse, and if it is worse or better, what's better or worse about it, and what needs to change. So yeah, that's all I've got for you today. As always, not financial advice. Cowboy out. Peace.